Hello, ladies and gentlemen. Welcome back to Line Chat. As we promised, we're gonna be dropping more about forex on every Tuesday. So on weekend is where we do market analysis. You can always come back to this channel to see our new video. So let's quickly go back. Let's quickly go to the topic of today. What is forex trading? What is forex trading? Forex trading is a process of speculating on currency price to potentially make a profit. A currency trading pair by exchanging currency for another. A trader speculating either one currency will rise or fall in against other. What do we simply mean about this? Let's say we trading CHF, USD CHF. So when we buy, we're saying dollar are more stronger than CHF, and when we sell CHF, USD CHF, we're saying dollar has decreased in value. So this is just rising and falling issue. So it's like we trading against each other. If the dollar is stronger, we buy dollar in value. That's just the simplest way. We buy dollar in value, and when we're selling, we sell in dollar. The dollar is this value. So the first pair comes in front, and the second pair, the first pair comes in front, and the second comes next. So it's just vice versa against each other, the value of the market. So I'm not gonna sit down here that you're gonna trade for one day and you're gonna buy Ferrari or what. There is a lot in trading, and most important thing, it's how you manage your capital, which we call risk management. What is risk management? Risk management allows you to manage the risk you're willing to take in trading. Let's say, for instance, you have a $5,000 account and you wanna place a trade. I will advise you, this is a lot. I will advise, or let me simply say, you have $500 account. I will advise you only risk 1% of your account as a new beginner for now. I will drop a link below. This site will help you how much you willingly to lose, and also calculate how much profit you're gonna make as per trade. More about that, I will drop the video how to calculate pips, how many pips you should risk in a trade. This strategy make you use less risk, because we wait until the market comes to where the order is. And when you are trading with the big bank, it simply means that you moving the way they are moving. So this allow to trade and risk less, make more profit and risk less. That's one thing I love so much about SMC strategy. So this strategy is combined with Falcon strategy, and we're using the whole methods of trading, which is line chart, to analyze the market. You can simply see and understand how market move with the line, because it makes things easier and make things understandable for every beginner who hardly study, let me say, who hardly see on how the candlestick can be a little bit confusing. So this is the reason why we use line chart to analyze. Then we can turn it back to candlestick. You can see like the candlesticks sometimes can be very, very noisy. So in this channel, as I says, we're gonna be dropping more content on how we can learn more about forex. So on our episode 1, we drop in what is forex and risk management, which I've already explained to you, and I will give a link below on the site that you can easily use to calculate how many pips you want to risk, and the profits, all that kind of stuff. And the next this thing that we're gonna cover, which I'll be dropping the video on every Tuesday. You can check our previous video and come back for more for it. I'll be dropping uptrend and downtrend, which most people call bearish and bullish market, and we're gonna be dropping support and resistance, which most people call supply and demand. We're gonna be dropping trend line. We're gonna be dropping market structure and M pattern, NW pattern, continuation and reverse pattern, identifying candlestick, how to use Fibonacci for reversal and retest, and also we're gonna cover order blocks. And last but not the least, we're gonna cover how we can enter a trade in the market. Without further ado, all this link I'll put them below so you can always come back. If you're looking for a broker and you don't have much capital to start with, you can always click on the link, refer link, then you get $30, and you can come back to the channel and see the setup that we taking for the week. So you make profit. The broker allow you to trade more with the $30. So when you make profits, then you can withdraw your profit. So without further ado, the sites that you can use to calculate the pips that you willing to risk, I'll also drop the link below. Then I'll drop a video on how you can use the site, on how to use the site to calculate your pips, and the site will show you how much you gonna be risky. And as a new beginner, I would advise, please risk less. Don't be too much eager to say you wanna make more money in just 1 week. You wanna buy Ferrari in just 2 months. Trading is not like that. Trading is more like you are working and you are getting paid. So you allow your money to work for you. Slowly but surely, your profits will start accumulating. Then, yeah, that's how trading works. Thank you so much for watching, and I hope to see you next week where I will be dropping the market view. See you next week.